Hi everyone and welcome. Thanks so much for joining our webinar today. We're excited to be hosting today's session to unpack the fundamentals and help you build on your confidence when it comes to payroll processing. So my name is Nerida Henderson and I'm part of the Employment Hero team here as a customer trainer. And I've been processing, training, and been involved in payroll in New Zealand for over 25 years. So I have that hands-on experience of all those pitfalls and frustrations that you come across during a pay run. So before I get started, I just want to talk about some housekeeping points for you to keep in mind. This session is being recorded and will be shared afterwards to the attendees there as an with extra resources later this week. If you have any questions during the presentation, feel free to drop them in the Q&A box below. We'll set aside some time at the end to answer those. So stick around until the end and we'll do our best to get through them all. Okay, so without further ado, let's have a look at our agenda for today. So we're going to look at what legislation covers payroll in NZ. We'll look at how to get your leave, pay rates, allowances, and final pay rights with avoiding those common payroll mistakes. We'll look at record keeping in payroll. We'll talk about some practical tips for the year end. We'll look at how payroll software can simplify the process. And then, as I mentioned, we'll lastly look at a live Q&A session there for you to ask those questions. Okay, so let's start off with what legislation covers in New Zealand. So as you all probably know, payroll compliance in New Zealand is governed by a few pieces of legislation. So understanding these essentials for every employer and payroll professional is very important. They essentially dictate how and when you pay your employees and what records you actually must keep. So we're going to have a look at the first part of this, which is the financial and tax laws. So the Inland Revenue Department, also known as IRD or IR. These laws cover the financial deductions and mandatory filing requirements. So your Income Tax Act and related regulations. So this is the core one of your PAYG, your obligations there. Also requires the legal calculations and deductions and pay income tax on behalf of your employees. So there's quite a bit there. So some of those key deductions are obviously the PAYE itself, but you might have student loan repayments. There might also include some child support, depending on whether that's paid to the IRD or the Inland Revenue, the Work and Income Department. You've also got things like your Kiwi Saver, so that governs that voluntary national retirement savings scheme. So employers must access an employee's eligible and auto enrolment there. You must deduct your employee contributions based on whether they've opted in and then, of course, what rate they've elected there. You then, of course, look at making mandatory employer contributions, which currently is 3% as a minimum. And then you pay that ESCT rate on top of it, which is your employer superannuation contribution tax. And then there's the payday filing side. So while it's not actually a single act, this is actually a mandatory compliance requirement from the IRD to submit your employee earnings and deductions information within 2 working days of every payday. So that's not the actual filing, that's not the payday end, it's the physical date you pay that money. You then must file that to the IRD within that period. So they're just the first one, the financial laws. Then you've got the other side of it, which is the employment and rights laws. So Employment New Zealand here. So these acts establish the minimum rights and entitlements for employees. which directly impact their calculations. So let's start with the Holidays Act in 2003. So we all know that this is a very complex piece of legislation for payroll. And this is where we do find that we have a lot of pitfalls, and we're going to discuss some of those today. So this governs your annual leave, so that minimum 4 weeks, your sick leave, so your minimum 10 days every year after their first 6 months. We'll talk about you've got bereavement leave and your family violence leave under here. And then you've got your public holidays and calculating those otherwise working days, which was also known as your ordinary working days as well. And we'll be going into public holidays a little bit later in the session. You've got your Employment Relations Act, so the foundation of the employment relations, so related to payroll. It mandates, so written employment agreements for all employees. You've got to detail accurate wage and time records and holiday leave records. And these actually have to be kept up to 6 years for the wage, etc., but 7 years for anything related to tax. You've got your Wage Protection Act in 1983, so limits when an employee can make deductions from an employee's pay. And generally this requires legal obligation like PAYE, or the employees give you actual consent to do some deductions there. You've also got the Parental Leave and Employment Protections Act from 1987. So this governs your entitlements for paid and unpaid parental leave. While IRD pays the leave, you record the process and must support an employee's application and return to work process. There is one more that we need to discuss, and it's last but not least, and that's the Minimum Wage Act of 1983. So this ensures that all employees are paid at least your current minimum rate. Now, there's 3 different rates that we need to consider here. There is adult, starting out, and training rates. So what does that mean? So for all employees that are aged over the age of 16 years, must be paid at least the minimum wage. But let's break down these 3. So I'm going to start with the starting out wage. So this is paid to employees that are between the age of 16 and 19 who are actually entering the workforce for the first time, or they're completing 40 credits of industry training there. So that's when you pay that starting out wage, and the current starting out wage is $18.80. Then you've got your training wage. So this may be paid to employees who are over the age of 20 and are completing 60 credits or industry training, including apprentices there. And this is also paid at the $18.80. Now, remember, these rates will change each year as well. Then anyone else then falls into the adult one, which is paid for anyone over the ages of 16. And you can see there it's $23.50 per hour. But always remember, these update yearly as part of the Minimum Wage Act there. Any allowances? So an allowance is obviously an extra payment on top of the employee's regular pay for something related to their job. For example, it could be travel costs, it could be training, it could be uniforms. However, there's actually no legal requirement from the employer side here. So allowances are generally a non-taxable allowances. There are some exceptions to the rule, and these can be found on the IRD website if required. The Holidays Act is obviously the most common area for non-compliance and can actually result in significant financial penalties. And this is where good payroll software is invaluable. Okay, so what we're going to look at now is how to actually get it right. So we're going to look at leave and final pays here so that we can start avoiding those common mistakes. And I'm going to start with the final pays. Okay, so when an employee stops working for you, Their last day must include some things. Now, just be aware when it is their last pay, we're not just talking about if you terminate someone, or we're also talking about if someone leaves on their own accord as well for that final pay. So any hours they've worked since their last pay. So if they've been working that week and you haven't paid them for that, you need to then do that. If you've got a notice period, so the amount of time between giving notice and the date of employment ends. So again, that needs to be paid out for them. In some cases, they may be actually working that out, but in other cases, you might pay that out in advance, which is called gardener's leave. Then you've got alternative holidays, so lieu days. So these are any paid day off for working a public holiday. So if they've got any of those sitting in there that they haven't used, you're required to pay them. You've also got, if you're in the industry that looks at time off in lieu, so instead of when they work overtime, instead of them getting that paid out in that week, they may bank it to use it later. And this is very common in the construction industry, where if it's a nice fine day, they may stay longer and work longer, but instead of paying them out that full amount then, you keep some of those hours behind for, say, a rainy day, and then they take that day off, but they still get paid their usual hours. So if there's any of those leave left, they are required to be paid for them. Then you've got annual holidays, so paid time away from work. What some people don't realise when it comes to annual holidays, they miss paying out the following. So if you have an employee with unused annual holidays, at the time their employment ends, they're entitled to be paid for any public holidays that fall within that period. Because technically the law says while they've got annual holidays available, they still technically work for the company. So let me give you an example in this case. So let's say an employee finishes on the 19th of December and they have 5 days holiday available to them. Then they're actually entitled to be paid for Christmas. So because you've got the 19th and then you've got 5 working days going to happen before that particular Christmas day. So they're actually entitled to be paid for Christmas, and then you have to extend their leave out by those days. So technically, if they have 5 working days of leave, they'd actually be working for you until the 30th of December being their last day. So you've just got to look at, is there any public holidays coming up that would be covered by these annual holidays? Then you've got holiday pay. So holiday pay is that 8% of the gross earnings from their last holiday anniversary date for the employee in this pay. Now, what a lot of people don't actually realise when it comes to holiday pay is that it is actually calculating 8%. So it will calculate 8% on top of your annual holidays you're just paying out, any alternative holidays you're paying out. So a lot of people work out that final pay on what's sitting there, but they forget that that's actually a gross earnings as well. So it's going to add a bit more onto it. So just something to be aware of there. Any other additional lump sums or other payments owing, or maybe a negotiated leave package on top of their notice period, you'd obviously pay those out as well. And then this will lead us nicely into talking about the difference between those annual holidays and holiday pay. So I want to discuss this because I think this is where a lot of people fall over, and not necessarily just the payroll person. Also, it's really hard for your employees to understand. And then this is when at this time of year you start getting a lot of questions about, why don't I have leave available for Christmas, etc. So let's have a wee look at this. So annual holidays, an employer must give their employees at least 4 weeks paid annual holidays, also known as annual leave, when you have worked for an employee for 12 months, and then every year after that. Holiday pay is 8% of your gross earnings, which is calculated each pay period and then rolls into annual holiday once you've been there for 12 months. So let me show you what I mean. So starting off on day one, I've got my two buckets here. I've got both holiday pay and annual leave, and they're both sitting at 0. After pay one, then you'll see that the 8% of the gross earnings goes into my holiday pay bucket. Pay two, then the holiday pay increases again by another 8%. Let's skip forward a little bit to pay 40, where it's now increased quite a bit in my holiday pay, but you'll see my annual leave is still 0. But we've got a lot in that holiday pay bucket. Let's move now to pay 52. So at pay 52, we're at the end of the first working year. So the next pay, then our holiday anniversary day is going to roll. So what actually happens to the holiday pay and the annual leave? So we're going to see now when that holiday pay rolls into annual leave and you're now entitled to 20 days of leave, and the holiday pay then starts for the next year. So that's where you can see it has now jumped across. They're now entitled to those 20 days paid leave. And you can see that next pay has gone into my holiday pay and the process starts again. But where it falls down and where a lot of people don't necessarily understand is what happens if that employee actually wants to use their leave in advance. And this could be because you're allowing them to use their leave in advance. It could be because you've got an actual shutdown period and they are within their first year that you let them use that as well. So let's talk about that. So I'm going to go back to say about round pay 40 again. And you're shutting down, in this case, I'm going to use Christmas, and then your employee needs to take 5 days of leave. What actually happens for this? So your leave actually goes into a negative of 5 days. So automatically, the holiday pay is still sitting at pay 40, but we've now got our holiday showing there that it's going to have a negative 5 days in it. So what happens when it comes to their anniversary time? So when it comes to their anniversary, instead of giving them the 20 days, it goes, I need to give you 20. And then it goes, but you've already used 5. So I'm only going to leave you with 15 days. So this is why people see their annual leave in that negative and why they might come and question you and say, why is my leave in a negative? Because they don't understand that particular process. So things I want you to be aware of, especially if you're paying out leave and they haven't earned it, so you're allowing them to go into a negative, is never pay out more than the value of your holiday pay there. Now, the reason being is you don't want them to leave you and then you're in a particular negative because you've overpaid them. The other thing, which I think is a great idea, is actually to get it in writing when they're using things like leave in advance, so that if the employee doesn't reach that anniversary, they are aware that that leave will be taken back because you'll take that 5 days back, but then you'll pay out the full value of holiday pay. So it just allows you to have that comfortable feeling of they know what's going to happen if they leave. So hopefully I've really explained there how those particular differences actually work there. Okay, so I want to talk now about our record keeping. So let's chat about what's important here. So as an employer, you must be able to show that you've correctly given your employees their minimum employment entitlements. So these records must be kept and they include, but not limited to, you can of course keep more, your wage records, so including any gross wages, deductions, PAYE, salary sacrifice, etc. Your time records, so the days the employee worked and the number of hours on those days. So if you're using timesheets, that would be where you'd keep those. Your holiday and leave records. So these include leave taken, what's been paid out, and your leave balances. You also require your wage records. So this includes what wages have been paid out and how that was actually calculated. You need your hours and breaks, plus their pay slips, and any personal information and employment agreements. Now, as I mentioned before, wage records must be kept for 6 years, but anything to do with tax, etc., must be kept for 7 years. Now, this includes for your terminated employees. So we're not just talking about your current employees. Anyone that's left the business or been terminated, you're also required to keep this information as well. So there's a lot there to keep. So I want to now point out some practical tips for our year end. All right. So the Christmas and New Year period is arguably one of the most complex times of the year for payroll in New Zealand. And that's due to the density of public holidays, the high volume of annual leave, the shutdown of your business maybe. And there's some critical things a payroll administrator should be thinking about. And these are broken down into the three core areas here: the timing, the leave, and the public holidays. So what I'm going to do now is break those down separately and go into each one. So your most immediate concern is simply getting the money to the employee on time, as banking and office hours change during this time. So think about things like early pay runs. The period for that includes those 4 public holidays, so Christmas Day, Boxing Day, New Year's Day, and the 2nd of January. If your regular pay day falls on or just after any of these days, you must process the payroll early to ensure funds actually clear and are available to employees on their contracted payday. So being the fact that Christmas Day is a Thursday, if your pays are normally in an employee's bank account on the Thursday, you need to make sure that they're there. And the best way to do that is to actually process them on the Wednesday. So another thing that's worth checking out is your banking deadlines. Check to see if you have a particular cutoff time with your bank or your payroll provider for processing in that week before Christmas and New Year's. These deadlines are often much earlier than usual because generally that last day we're all wanting to get on to our break rather fast. Staff notifications. So clearly communicate the exact revised pay dates to all your employees well in advance. So it may be a company-wide email, or if you're using our HR product, you might actually use your company feed there inside to prevent confusion and bank fees for any late bill payments. Now, I know that seems, and you might say to me, but hold on, Nerida, that's kind of their responsibility. It's much nicer if they know that what's happening from your side, then they can deal with their payments there. And then the final filing. So ensure your payday filing to the IRD is done correctly based on the actual date for you pay the employees, not the date they would have been normally paid. Because if you've changed that date, you need to still then work off the actual date of pay. Okay, so let's have a look at the next area, which was around the managing leave and close down. So the volume of leave can create issues with eligibility and calculations here. So I want to talk about the close down if that's applicable for you. So annual close down, there are some things you need to actually be aware of. So 14 days notice. So if a business is shuts down, so a close down period, you must give employees at least 14 days written notice before the close down period starts. So hopefully if you're in that boat, you've already done that because we're within in those 14 days now. Leave for new employees. So this is obviously a critical side. So employees who have not completed 12-month service by this close down date must be paid 8% of their gross earnings since their start date or last anniversary for that close down period. Have their anniversary leave, their annual leave anniversary date reset to the start date of the close down, or process an insufficient leave, which I'll talk about again in a minute, so that you don't pay over the value. Now, so you've got two choices here. You can pay the 8% and restart their anniversary at your close down, or you can pay them leave in advance, which which we've sort of talked about a little bit, but we're going to keep going in a moment. Either one is fine to do and leave their anniversary date alone if you pay the insufficient leave option or leave in advance. So for insufficient leave, for employees who have used all their leave, the close down period can be taken as leave in advance if you agree to it, or unpaid leave. So there are a couple of options there for you. Your annual leave payments. So your pay rate check. So remember that annual leave must be paid at the higher of the employee's ordinary weekly pay, so OWP, at the time the leave is taken, or their average weekly earnings, so their AWE over the last 12 months. So this is also a common error people come into, is they actually try to override their annual leave to their ordinary pay rate, which is not correct by New Zealand law. So we need to pay the higher of those. If you're paying out any lump sum payments, so if an employee has requested to be paid their annual leave in a lump sum, so before they go on leave, because they do actually have the right to do this, you must accommodate it unless you have something in your agreement, so your contract, that says that every pay is a normal pay cycle, they are actually entitled to that lump sum. So what I mean by that is if you're shut down for 2 weeks and your employment agreement doesn't say during that shutdown period that you'll pay them in the normal cycle, they are actually able to say, before we close down, say the 24th, I want you to pay me my 2 weeks of leave then. So they're just a couple of things there to be aware of. So let's have a look at this last but most challenging side, the public holiday calculations. So we know that this is the most challenging part of New Zealand payroll, is getting that money right. So you must determine if there is a public holiday, and we of course know that over this period there is, but this applies any other time of the year as well. And is it their ordinary working day, so the OWD? Now, some people would not remember this as your ordinary working day. It's the same thing for that employee. So we're going to go through this particular table here. So you can see at the top the example there of your hours. So what we've got is you've got you've got holiday is unworked. Is it their ordinary day of work? And I've got yes. So therefore the payment, they will be paid for that day off at that relevant daily pay, which is also known as their otherwise working day, or their average daily pay there. And are they entitled to anything? No, because they're actually having the day off. They might be going to the beach, but they're having the day off. They're not working. Holiday is unworked. Is it their normal day? No, they don't usually work on this day. So therefore, no payment unless your company policy states otherwise, and therefore no entitlement there. Holiday is worked. Is it their ordinary working day? Yes, they normally work. Therefore, they're entitled to time and a half for the hours worked. Now, what we mean by the hours worked They are, if they are, say, an 8-hour day and they work 6 hours on this particular day, they're entitled to 6 hours at time and a half, not the whole 8 hours, because they're only entitled for the time and a half for the hours they actually physically work on that day. However, the lieu day that they're entitled to get, that would be for the full day, because it's a full day in lieu. Okay, and then the last one there, we've got holidays is worked. Is it their normal day? No, they don't work. No, it's not their normal day of work. However, they did work, so they get time and a half for the hours worked, and they get no entitlement because it's not their normal day. So this is where it can be quite complex when it comes to leave inside New Zealand. Now, what I want to talk here about now is employees on annual leave. If a public holiday falls within a period of annual leave and it is their otherwise working day, then they must be paid for the public holiday and not have any annual leave deducted for that particular day. Now, we haven't talked about our complex work patterns, which I'm sure some of you on here may have them. So complex work patterns could be for part-timers, they could be for casuals or shift workers. You must look at their regular work pattern to determine if the public holiday is an otherwise working day for them. You cannot simply say the business is closed if the employee would have normally been rostered on. So Employment Hero has the ability to help you in this area because we automate public holiday pay with payroll sets. And those payroll sets include the following options. Employees paid a penalty rate for that public holiday, so that time and a half. Employees paid their flat rate and given a separate public holiday day, and for employees that actually have the day off. So for those of you that are currently using our Employment Hero payroll system and you're not actually using our public holiday rule sets, it would be a good idea to investigate that because then that helps this process for you. Now, don't also forget, even though it does not fall into this particular Christmas period, I want to talk about the Mondayization rule. God, that's really hard to say. Although it doesn't apply for this period, you actually need to be aware of it, and it's a very important piece of New Zealand payroll legislation. The Mondayization rule, God, it's really hard to say that. This determines when a public holiday is actually observed when the calendar date falls on the weekend. So the key takeaway on this, it only happens to certain public holidays, and it's really good for you to go and have a look at those. But it's to ensure people who don't normally work weekends don't miss out on those public holiday entitlements there. Okay, so hopefully we got the public holiday calculations there, or the otherwise working day rule. Okay, so let's talk about how payroll software can simplify this. So obviously one of the things I just talked about before is you can use the rules. That's definitely one way we can help simplify that. But I'm also going to introduce the Employment Hero payroll. So our intelligent IRD recognized software takes the guesswork out of that in compliance. We automate everything from payrolls to payday filing to complex holiday calculations, freeing you up to actually focus on the area you want to do, which is, of course, growing your business there. So payroll, our employment operating system, payroll in one smart system. So as I said, it's a single platform. So it's a powerful payroll that is built into all-in-one employment operating system, combining HR management, employee experience, and hiring into that single platform for you. So how does this help? It helps with your admin. So less admin means more time in doing other things. So the all-in-one platform helps you combine those HR management things as we talked about and the hiring into that single platform. So really, really, really important there, because the more time we can have back, the better. So it's compliant, not complex. So we keep you compliant with any New Zealand laws and automatically update with complex pay rates and Holiday Act requirements. So as soon as the minimum wage goes up, then we will make sure that's part of the system as well. And then we've got support there. So we give you local support and a team that truly actually cares about getting your small business through these difficult times and making sure that we provide software that can help with that as well. Okay, so that is all about our Payroll Foundations webinar for the day. So the next section is actually a live Q&A session here. So where you get a chance to actually ask questions there. So we'll see if we've got any questions. Have we got any there, Bernie? I can see someone's just put one in the chat, so I'll have a look at the chat. Okay, so Bernie was the one that put one in the chat, and she said, we don't have any questions so far, but if there is anyone that would like to ask a question now, that would be great. I'm happy to answer anything live as required. It looks like we've got a question here. If you run and file a pay with IRD and then the employer doesn't pay until a week later, how does this work? Okay, so good, great question, Amy, there. So if you pay and file the pay with the IRD, it technically files it on the pay, you should file it on the pay date. So you can file in advance to the IRD, so especially around these time of years. So what I would suggest you do there, Amy, with that one, is that you make sure the payment date actually does say whatever day the employer is actually going to pay it. So what I mean like that is, let's say you process the pay today because you're going away yourself and it's not going to actually be paid until the 24th. Then I would put the payment date as still being the 24th, even if you file it today, that's fine, because it will still register the 24th with the IRD. So hopefully that answers that one for you there, Amy. I've got a couple more questions, which is great. When a casual employee leaves, what must be included in their final pay? So great question there. So a casual employee is only entitled to any hours that they've worked that week. And of course, they're 8%. Now, with a casual employee, they should technically be getting their holiday pay, that 8%, paid out in each pay. So there shouldn't be any extra to pay out unless they've worked hours that week. They're not actually entitled to anything else unless you have something in your employment agreement, e.g. like if you fired them and you said that you had something in there. But generally a casual employee gets their 8% each week in their pay. So therefore they're only entitled for any hours they've worked with the 8% on top of that at that stage. Just while I am talking about casuals too, obviously not in termination side, but something to also be aware of with casuals, and not a lot of people realise, is casuals can be entitled to sick leave when they're working for you as well, if they fit certain criteria like regular hours and stuff within that casual. So that's also something to be aware of, and a great thing to check on the Employment New Zealand Act there for casual sick leave. So hopefully I've answered that one for you. Okay, can you talk about unscheduled pay runs, please? Okay, so an unscheduled pay run, so that's absolutely fine to do. Again, just make sure that you have those pay dates correct, so that when your inland revenue goes through, it's the date of pay. It's the same as if, let's say, you as the payroll person is going to take some time off and you want to process all those pays. You can do that now as well. And again, send it to the Inland Revenue. Just make sure it has the correct pay date it's going to come out. So if you're taking 3 weeks leave, you can do that. There are instances where people do actually say to their employees, I'll pay you your ordinary time for the next few weeks, and get agreement with them. And then any overtime I'll sort out when I get back. That happens quite regularly as well. As long as you're in agreement, that's fine too. So unscheduled is simply okay to do. Just make sure your dates are correct. And again, you file it in the correct period. So hopefully you're happy with that one. Amy here, if someone has more than their basic annual leave entitlement, e.g. 5 weeks, is the holiday pay still 8%? Or would it be 10% in this case? Great question, Amy. It is actually 10% in that case. So the minimum is actually 8, and then every week after that you adds an extra 2%. So for 5, it's 10%, for 6, it's 12%, and so on. So you are correct on that. Great question, though. Okay, Sonia's got here work patterns. Can you please explain how your system works for leave if they increase or decrease their hours? Okay, so increasing and decreasing hours is very interesting. So, Sonia, I'd like a little bit more information on that one if I can. Can you put there for me, are you meaning increasing and decreasing hours in a regular work pattern, or are you meaning that they used to work 40 hours and now you've moved them down to 30 permanently? Can you just give me a little bit more on that one, and I will leave that unanswered for now so that I can get that. Zoe, when you say that after 52 holiday pay, they get 20 days of annual leave, during that 52 weeks of holiday pay, they get 8% of their gross earnings. What about those who are on annual leave already? Do they still get 8% each pay run plus the 20 days? So, okay, so with this one, Zoe, so basically holiday pay is something that accrues during the year. So it's actually your accrual, and it's accruing. Annual leave is the entitlement, and that's when they're entitled to actually take it. So what I mean by that is when you start accruing those 20 days, but you're not actually given them. They sit as that holiday pay, which is that 8% of the gross earnings. Then when you get to that 52 weeks, that's when they become that 20 days or that 4 weeks of leave that they're entitled to. And the holiday pay starts for the next year, accumulating the 20 days for the next year. The only time you see these two being paid out together is in the termination pay. And that's because they'll get anything that they haven't used as their entitlement, and then anything they've earned in that next year that hasn't reached the entitlement yet. So yeah, so that's where only time you see the two in play. And that's why quite often you can see that annual leave in a negative, because they use that leave in advance. So hopefully that answers that one for you there, Zoe. Okay, I'm down to Samantha here. So Samantha, what is the best way to process a payroll through EH when the company pays standard annual holidays and public holidays during the shutdown period? when we are using external timesheets imported, and this is not done during your shutdown. Okay, so you don't process timesheets during the shutdown. I would actually suggest to then add for yourself, because you should be able to put timesheets in. It's probably still a good idea to use timesheets. So because you already use them, and that's also a great record keeping to keep everything consistent. So I would suggest, because you can put them in yourself, is put them in for those employees using the public holiday codes in there. And then because you're putting them, they'll automatically approve, so you don't need to wait for that approval process. Okay, so I'm down to Beth now for casual employees. Does the employer have the obligation to the IRD that the employee is not working at the time being, but they can also be hired in the near future, e.g. for tradies? So casual employees, obviously they don't have a time frame when they work for you, and they can come and go as you please. That's the whole point of a casual. The only particular time that this can come in interesting around is the Kiwi Saver. Some casuals actually do Kiwi Saver. So in that case, you may get a question from the IRD saying, hey, you've been processing KiwiSaver for these people, but then all of a sudden you haven't. And that's just going back to them and saying they haven't worked for us. You don't have to close them off each time and restart them. You can just leave them there. It just may be a question you need to answer at any stage. But no, there's no actual obligation to tell them they're not working during that time. Okay, so we've got Eleanor here. Eleanor, hi, can you please explain the process of the final pay with annual leave again, especially around calculating the public holidays? If using payroll software, can we trust that this has already been calculated? Yes and no. So if you are using Employment Hero, absolutely, because I know it's part of the process. It does actually say around that final pay. If you're using other payrolls, I can't guarantee that, because I don't know their process. And I will give you a personal example here. I have worked for two previous companies, and I am not obviously talking about Employment Hero because I work here right now. I have worked for two previous companies which both failed to pay me my public holidays when I had my final pay. I question it because, of course, I knew the law, and they both told me that it's not an entitlement. So it is, and that's why I wanted to mention it, because it's a huge area of mistakes that made. And I'm sure there's probably some of you on here that didn't know it and have already made this mistake, which is why I wanted to talk about it. If you, so basically what happens is you've got your annual leave entitlements. So if they've got any days sitting in there that they're still entitled to take off as annual leave. So if they rocked up to you today and said, how many days of annual leave I've got, and you say, right, you've got 3 in the system. If they were to leave today, then Friday, Monday, and Tuesday, they technically still work for the company. So if there was a public holiday on the tomorrow or Monday or Tuesday, they're actually entitled to be paid for it. Because there's not, then you wouldn't. But if they came to you and said, I've got 10 days worth of public holiday, 10 days of annual leave, then you'd be going Friday, Monday, Tuesday, Wednesday, Thursday, and so on. So therefore, they'd actually be entitled to be paid for Christmas Day and Boxing Day. And then their end date goes out by 2 days, which means they're possibly going to then fall into New Year's Day and the day after. So then that goes out by another 2 days to when their final actual working day is. When it comes to, it was just the calculation of holiday pay. So it really depends on your software there, Eleanor, and I wish I knew which one you're on and I could answer, because I do know about a few, but I do also know that this is quite a common area that gets missed. Okay, Amy, I processed it, but when the employer doesn't have the cash and doesn't pay for sometimes a week later. Okay, that's really a hard one. And what I would suggest in this case, Amy, is actually talk to the IRD and just go, hey, I'm processing this. This is the day we expect it to be paid, but sometimes he doesn't have the cash, so it doesn't get paid. And then they can make a note on your file. Now, the reason I'm saying to contact them is there is actually penalties involved. So this way that there won't be a penalty as such, or maybe there will, but at least you've done your due diligence to try and remove that penalty. There's not a lot else you can do in that case. I'm sorry. And I'm sorry that you have to deal with that. I've been in that scenario before and I know it's not easy, Amy. So I'm really sorry about that. Nikki, can public holidays not work rule but be implemented for staff who don't have set days or hours? No. The rule actually does work off those set days and hours. So in that case, that rule wouldn't be the best to implement, sorry. Okay, are casuals entitled to public holiday payments? So this will actually come down to if it's a normal work day for them. So what do I mean in that? So generally they look at the average of the last four weeks when it comes to this. And if that casual, for instance, has worked on that same day for the last 4 weeks, then it could be classed as an ordinary weekly ordinary working day for them. It all comes down to, is that actually a casual or are they actually a permanent part-timer when they start doing that? So that's something you really should consider with that one around the casuals. Okay, I'm getting through these, so hopefully these are helpful. Um, Dara here says any leave above 4 weeks is not covered by the Holidays Act. Is it whatever the employee and employee agree to would be the rate of pay for that additional week? So it is actually technically still covered by the Holidays Act because the Holidays Act agrees that it's a minimum of 4 weeks. It doesn't talk about maximums, it's a minimum of 4 weeks. So if your employer has agreed to pay above that, they generally still have to pay it at the higher of the two rates, unless it's stipulated and agreed to in your employment contract. Because I know that there are some agreements in employment contract where it's more like instead of even though in New Zealand it's not by law, instead of increasing their annual leave, they actually say we'll give you an extra week, but it's just a one-off. It's kind of like a long service leave, but it's not entitled by New Zealand law. And then that one sometimes is at the ordinary rate. So that can be there. Okay, so we've got that one there. Okay, so Sonia, thank you for coming back to me. So Sonia's one again was around increasing and decreasing work patterns. So the work patterns agreed to reduce hours permanently. So this one is quite an interesting concept. Now, there's a couple of things you can do, and it may be worth getting some help around these because obviously, they're still entitled to 4 weeks at whatever those hours are. Okay. But if you, I always say the best thing to do when you're reducing hours is actually to wait till the next anniversary date and then do it. Because if you do it halfway through, so let me explain. So let's say they work 40 hours for half of the year and then 30 hours for the other half of the year, then technically, if you left them at 40 hours, then when they get to that particular anniversary date, they're going to be given the 40-hour wage because that's what the system is set up for. If you change them at the halfway point, then they're going to get the 30 hours, which means they can get less as well. And then it comes down to the annual leave calculation. So if you change it, the annual leave rate should go up to reflect those extra 40 hours. So there's a few things you can do. You can, and this is where I think it's best to get help for your particular scenario. You can decide to change their holiday anniversary date to that new date when they're going to reduce and allow it to roll so it starts there, and then just remove the extra hours of leave it gave them at that point. So you'd work out how much leave they were entitled to that point. That is one option. Option one is you could leave it to the anniversary date, allow it to roll, and then make an adjustment. Option three would be to make the adjustment now and make sure the figures are correct. So there is going to need to be an adjustment involved in that one. So it really comes down to which is the best process for you based on what you've actually done. And if you've already changed this and haven't done the adjustment, then it may be worth waiting till their anniversary date and making yourself a note. I need to consider what they're going to be given here. The only downfall of that is if they leave in between times. So hopefully that sort of helps you, but it is one, and I've done many of these myself, work through these with clients and work through reducing these, and I know it's not the easiest, so I understand there. Okay, you've got another bit here, or being working part-time and now working full-time. So they agreed to the contract amendment to change their hours onto salary. Okay, so similar scenario. Luckily with increasing, it's not as bad as decreasing, because decreasing means they could be given more. In retrospect, increasing is not as bad. But again, you can do an adjustment for that. Okay, so we've got another question here. What is included in the calculation of time and a half hours worked on a public holiday? Okay, so time and a half is actually the physical worked hours. So if it's their normal day of work, so that ordinary working day, and they normally work 8 hours, but they only work 6, then you pay them time and a half for the 6. So time and a half is their ordinary wage times 1.5. So just for my brain today, if you're paying them $20 an hour, that means for 6 hours, you'd be paying them $30 an hour. That's right. Yep. For that week or that work time. However, they would get a full day in lieu. If they're a casual employee, then they just get that time and a half. So if they're paid $20, then they will be paid $30 for the actual worked hours. Okay, for casual employees, is there a function to generate timesheets for OWE based on EH calculations, or is there a report you can run to see who is entitled to OWE based on the last 4 weeks, as a big chunk of our payroll is casuals who are rostered different each week? Zoe, I'm going to have to look into it. I think that would be a report. So I will take that one offline and get back to you. So before Christmas, I will send you an email response to that one, just to check which way is the best way for you to do that. So I'm not going to put an answer. I'll just type, just put done on that one, but I will get back to that one. Does this include any normal overtime rates payable, or is it additional? So I've got this question here from Anonymous. Does this include any normal overtime rates payable, or is this additional? I'm not sure what you're talking about there. Can you give me a little bit more information on there? Okay, Vin's asked how to process parental leave in EH and when it needs to be processed. I've just had my chat disabled, so I can't see those questions anymore. So, for those of you that we didn't get to your questions, we will certainly look at uh, getting to those in the future. Okay, so we're going to wrap up the session. So thank you there. I'm just going to play my last slide there. So thank you for joining us. As I mentioned, this webinar is being recorded and a copy of the slides will be presented to you and sent out after this webinar. And I will look at any questions that I hadn't managed to get to as well. So thank you again and have a lovely day.